Now, another tip is the 60 MA. The 60 MA is a moving average. So it's the average price of the security over 60 days. So a 60-day period, it moves with the security. So let me show you. All right. So this white line, I'm gonna go back to the daily so we don't get confused, because it just makes it easier. When you see the bigger picture, it just makes it easier. So this white line here is the 60 MA, and it just basically shows you the average price of the security over a 60-day period. When the price is above, when the candlesticks are above the 60 MA, it's a buying zone. It's a buying opportunity. You want to be in the buying entries. You want to buy. So every time that price is above it, you want to look to buy. So, the price jumped up, it compressed, it tapped or came near, it respected the 60 MA. So the 60 MA could be considered a dynamic key level, right? So every time price came near or tapped the 60 MA, it went up. But clearly now we see that the price is trying to get close to the 60 MA. So if the price closes, and when I say closes, I mean not a wick, but an actual baddie underneath the 60 MA line. If a baddie, candlestick baddie closes below, yeah, that's a selling market. It's what you call a bear market. Right now we're in a bull market, but it's kind of changing. So another thing you can do is say, okay, well, where's the next key level? We can definitely say this is a key level here. We can definitely say that that's resistance up here. So if we use that information, we can go down to this next level, the last key level, the last compression zone, and kind of see, okay, what happened in the past, what may happen in the future, because usually charts rhyme, candlesticks rhyme, the future rhymes with the past in the market, right? Until it doesn't. So, I mean, it is what it is. That's why you have to have several confirmations before you enter a trade. So one confirmation would be, okay, boom, this is a key level here, this is resistance, boom, price created a bottom or a key level of support, and confirmation would be this wick, right? But then you would look for a retest of the key level of resistance again, and a higher low. So this was a low, and this was a low. But as you can see, this was a higher low respecting the compression zone. Okay, so that's your confirmation. You want to get in trade here, really. You want to buy here. Once price goes up, goes down, respects a level, hits a level, creates a new level or a compression zone, that's when you want to be in the buy. That's a buy zone. Okay? So looking at this past action, we want to see price touch a key level and respect it, right? We need price to respect the key level. Now price can go all the way back down to this last key level. If it does, that's kind of bearish to me. I would think the price will continue to fall because, again, we have this 60 MA right here at that resistance, and usually when the price crosses the 60 MA, the price continues down further. Now, do I think crypto is over? And no, I don't. I think it's a correction. It's a correction. Yeah. Okay. So this is another exchange that had dogecoin since 2014, right? So all this data is back from 2014 to January. So this is where we can get into a weekly time frame. So this will be a weekly time frame. Each candle you see represents a week, right? And I just told you, people bought Dogecoin way up here. Way up here. What year is this? 2017, right? People bought Dogecoin way up here. And what happened? They lost their money. They probably left crypto. They got washed out, man. Got washed out. All you had to do was hold it. Look at it. Now let's look at some key levels. Some quick key levels. I'm going to just run right through it. All right? So, boom. This is a floor. We're going to say that that would be support. We're just going to keep it simple. We're going to run right through it. Price went up. Hit this line. That would be resistance. Right? We're talking about this wick right here. So let's keep it simple. Got this little wick. Boom. Wick came down. Price respected this level and continued up. Price hit another wick. Wicked. Another wick at the previous resistance, right? Pay attention. Price then again went up. What is that? Another resistance. Just look on this left side. This is the past. The past. These moves already happened. But your levels extend out, right? And price reacts to the levels no matter what. For instance, you got a wick here, right? Price shot through, but you got a wick there. Where's another wick? Price can't get past that 60 MA. Price is fighting, trying to get past this 60 MA. Wick. Bingo. Big money. This is your money. Price respected the key level underneath. It respected this key level here, right? It wicked and said, nah, I don't want to go no further down. Okay? It's a higher low as well. So this is when we start getting in the trend line. So let me show you a trend line. So similar to these horizontal lines, but what you can do is you can take it, bring it out. Boom. That's your lower. That's your higher low. So you got this main low here that created this key level. Okay. Now you have a higher low. That's your second confirmation. Your first confirmation was this wick that didn't touch previous support, previous resistance. It respected that. It created a higher low. The wick showed you that it's buy pressure in the market, right? This wick right here, that was the tricky. See, trade is gonna trick you. Mostly institutions and bankers and all this is more manipulation than forex, but Bitcoin is very similar. I'm not gonna get into the depths of liquidity and market makers, but just know, pay attention to the wicks, pay attention to the market. This wick would make you think, oh yeah, price is gonna do the same thing it's been doing. But the overall trend is up because of this trend line. The trend line shows you that price is respecting not only this key level, but it's respecting this trend line level, which is another key level. This is price action. Understanding key levels and candlesticks. Mainly the wicks, because the wicks give you a lot of information. Now, the baddie will give you a lot of information too, but those are mostly for big moves. So here would be a big move. This is a big baddie. This is a big baddie as well, and this is a big baddie. But you want to trade the compression zones. Where's the compression zone here that we could have got in, right? Where did price range and compress? Let's start from here. We had a little compression, double top compression. We go down to the bottom, boom. That's your compression. Price ranged in this area. This is a compression zone. And this is key as well. If price drops out of a compression zone and goes back into it, the price is 9 times out of 10 gonna go higher because price respected the zone. If price didn't want to continue higher, it would have broke all these levels. It would have just broke down. Let me try to get you something. It would have just continued down to the next level and then maybe came up and then continued down. But price said, I need to get back into the zone. I need to pass the 60 MA and go up. It can be this simple. This is the simplest way to trade. You can get indicators and do the most, but price action is really it. The fundamentals for crypto in general are good right now, so I would just buy every dip possible. But remember, you have to know your key levels. So a key level would be here. We talking about a recent key level, so we can say this could be considered a key level here. Right, and I'm gonna just draw a trend line, but this could be a key level here. We already know that this is a key level of resistance here, right? I hope I'm making sense to you. If you have any questions, please let me know in the comments. Like, this is the first recording. It'd be good to know, like, if you're a beginner, like you don't know anything, because we can do videos on how to open up TradingView, how to find a certain security. So what I mean by that is you can type in anything you want. So we can say Bitcoin. You just open up a Bitcoin and you can look at Bitcoin. You can look at Litecoin. So we can open up Litecoin. So if you need help with simple things like that, the real basics, you can let me know. And you could chart this easier, I feel. So got a key level up here, and we just breezing through it to show you how simple it can be. Got a key level there. Definitely a key level. Key level. And let's make them yellow so they can stand out a little bit. So I want you to see how easy it can be to trade. You just have to see where price respects key levels. That's it. And understand the candlesticks, the wicks, the body. What do they represent? The overall trend. Right? And when I say an overall trend, that's where you can kind of get into trend lines, right? So I'll take a trend line and I'll start from the top of a candle or wick and go the direction that the market is going, right? Boom. So we would have drew this all the way down, right? We would have drew that all the way down, and we're gonna keep this red for all intents and purposes, and we're gonna go down to a bottom of a candle and continue down the trend, right? Let's keep it on this key level just to make it look good. All right. Price broke out. Look at the body. Pay attention. Look at the body on this breakout. That's important. That shows a lot of buy pressure. This one candle outside of this trend line or this key level. Remember, all these lines they're just key levels, right? Levels that price react to. Not only did you have this big green body of a candle, the next candle you had a wick to the bottom, and then you had another wick to the top. But see, this wick right here is showing indecision. What's important is this one to the bottom directly after the big body. because it closed outside of this key level, this key trend line, and it just continued up, right? Price went above the 60 MA, tapped this key level, and rejected. It rejected it. So you have to pay attention to your key levels. Remember, we drew this key level out on the left side. You know what I mean? It was on the left, but price is still going to react to these levels going towards the right side. And again, price went down, so it hit this level, came down under the 60 MA. We're selling. We got a wick here. Now we're buying. Look at the wick. Got a wick here. We buying that. Price hits this key level, wicks again. Let's show the wicks. Wicks at key levels show you everything you need to know. It's indecision. We can't make it past this key level. The baddie didn't close above it. It wicked up there, but the baddie closed below, right? And then you had huge sell pressure, huge baddies, red baddies, which means it's bearish, right? The price just kept closing lower and lower and lower. And then we got another wick. We buying. We buying here. Look at this wick. And look at the key level. We're buying. And this is where you can start to say, is this a compression zone? I think so. Let's look at it. Is this a compression zone? Let's go from these wicks to the very bottom and just bring it out. That's a compression zone to me. Price reacted. No, I'm sorry. Price respected. It created a few wicks here, so you can kind of bring it up. But I'm considering all this compression. All this compression right here. Price went up and ranged. So you came down, created the bottom of the compression zone. You came up, created the top of the compression zone, respected the bottom of the compression zone, and you came right out of it. Right? You had a few wicks to trick you. They tricking you out your position. So a lot of times you'll see price just hover in a key area, a key zone or key line of resistance or support. It'll just hover there, right? I wouldn't really trade those. You want to trade a breakout. So you could have got mixed up right here. And again, I'm not getting into leverage trade and everything like that because that's more in depth. So if I enter a trade here and the price wicks up higher or the price wicks lower, I could be taken out of my trade, right? That's a little more advanced. We're just talking investing. So if you're just buying, if you're just looking to buy, I'm showing you zones and areas to buy a certain security and where to get out. So you want to buy inside of a compression zone. You want to buy wicks that go down and come up, showing buy pressure. You want to buy the breakout of a compression zone. You want to buy when the price is above the 60 MA, the white line. And when prices are at a key level in wick like this, you're looking to sell. Look at this. You're looking to sell. Price is still above the 60 MA, but we at a key level and the price just got rejected. You can look at this wick, but again, remember, you can get tricked out of your position. So at key levels, sometimes you will see indecision, right? It's to get tricked out of your position. Am I buying in this area? No. For one, there's no price structure. Let me show you price structure. Compression zone is price structure, right? When price wicks like this, that's price structure. because it creates a base or a foundation to either bounce from or fall from. So here, this would be considered price structure, and this would be considered price structure. Notice how this price structure, you have wicks to the bottom and the price moves up, and now you're reaching a key level and the price wicks up. You have wicks into the key level, but nothing closes above the key level. Nothing closes above the wick itself. So that's a sell. That's to get tricked. You bought here and you thought we was going right past this key level. No, you got tricked out your position, and now you lost money because you bought here, but the price dropped here. And this was just to wash you out, because now we're in a compression zone and we're going higher than you thought we were going. Now that is a little in-depth, you know what I mean? I'm not going to get deep into it. Maybe in another video. I'm just trying to show you the basics of price action, candlesticks, compression zones, and key levels. You only have one indicator on the screen right now, and that's the 60 MA. It's not rocket science. And you can just look at this and study it. You got key level of a trend line, right? You got a dynamic key level of this 60 MA that moves with the price. And then you just have key levels, right, of price structure. Key levels of price structure or market structure, whichever one you want to say. Basically, all it means is it created a foundation for price to react from. So you can just look at this. We're not even getting into patterns. We're just trading price action, wicks, bodies, key levels. That's it. And compression. That's it.